Ladies and gentlemen, welcome to another Independent View with your host, Lobo Tigre. My guest of the day is Robert Breedlove. He's the host of the What is Money show, and he's founder of Parallax Digital. I've never met Robert before. I've never spoken to him before, but I found him on a YouTube video discussing Bitcoin, and he struck me as being one of the most rational, reasonable people that I have seen defending Bitcoin. It sounded like he knew what he was talking about. And I've had questions about it for some time that I didn't want to get into this big fight or debate. I just wanted somebody to explain some things about this to me, and I thought Robert could do that. So I asked him if he would be willing to do an interview. He said yes. Here we are. Robert, thank you so much for coming on the show.
Thanks, Lobo. Glad to be here.
All righty. So let's jump right in. We don't need to frame this. I think most of the audience knows what we're here for, what's going on, and the core question that begins it all is the value question. You know, if I'm going to buy Bitcoin, I'd like to know that as a buyer that its value is at least as much as it is now, so it's not going to evaporate on me. Or if I'm a speculator, I want to know that the value, or think that the value is greater than it is now. But I have a real hard time coming up with a valuation for Bitcoin. And I understand the argument on your t-shirt. Why don't we go ahead and start with that, and then we'll go from there.
Yeah, sure. So see if I can get the t-shirt in the frame. It says infinity divided by 21 million, if you understand. So pretty straightforward t-shirt, but to the uninitiated, it is perhaps undecipherable. It is hearkening to the theory of hyper-Bitcoinization, which is the liquidity event where currencies collapse against Bitcoin, and Bitcoin ultimately devours all money and all store value premium of other assets, which largely, by the way, the reason we use things like oil, real estate, equities for store of value purposes is largely because the store of value functionality of fiat currency has been totally compromised. So people have to seek shelter from inflation in alternative assets because money cannot be trusted to hold its value. So to get to the question about value, I think the first most important point is to define value, actually. We think that dollar price stability, if something is expected to maintain or increase its dollar value year over year, that we think that means it's increasing in value. One thing this fails to account for is the depreciation of the dollar, right? So this is where it gets tricky, and this is why I named my show this, actually, the What is Money show, because that is the first principal question people need to ask themselves to get to the bottom of all this and unravel the mystery. But the dollar today is the economic frame of reference through which we are viewing, perceiving, and thinking about the world. So when we see assets increasing in nominal value, you see your equities portfolio going up, your house, commercial real estate, any relatively scarce asset to the money supply, people tend to think that these things are becoming more valuable, when in fact, it is the dollar through which they are thinking about them, the aperture through which they are perceiving the asset, that is becoming diminished. And this confusion, I think, is where central banks have played for centuries. The people in Weimar Germany, when the mark was collapsing, they falsely believed they were becoming wildly rich towards the end of that hyperinflation, until all of a sudden the currency totally collapsed and was worth nothing. So there is this illusory effect related to inflation that may induce people to think that their assets are accruing value, when in fact it's just the money they're thinking about them through is losing value very rapidly. So it's a relationship, it's an exchange ratio, if you will. Value itself, I would define it as the relevance of something to your goal-directed action. And this is why value is inherently subjective. It is not intrinsic. It is not an objective quality of any asset. The example I usually like to give is I say, this table that I'm using to rest my laptop on and record this podcast with you right now, it is valuable to me because it is an accessory to my goal-directed aim of recording this podcast with you. But it could just as easily become an obstacle to me if someone paid me to jump over it. And this is like a worldview shattering thing for Western materialists that think things are things, right? The table is the table. But that's not true. There's an entire realm of relevance, this subjective domain that Austrian economics explores very deeply, that exists in parallel to materialist reality, and in many cases is more important, because the realm of human action is much more dependent on the subjective domain than the subjective domain. So value is ultimately, if you want to get very simple about it, it's what people want, right? And people tend to want, no matter what action they take to move from A to B, the purpose of any conscious action is to, as Mises would say, reduce uneasiness, or as I would say, alleviate anxiety, or to improve your quality of life, to improve your state of affairs, whatever it may be. And that valuation is inherently subjective, right? That what you think is going to be better for you to move from A to B is different than what I'm going to think is best for me moving from A to B. And we're going to rank order these things differently, right? You may want to move to Puerto Rico. I may want to move to Wyoming. We may have our reasons for that. And we may put moving, I may say moving is my highest priority. Moving may be your third highest priority. You may have other things above that. So valuation is this inherently subjective domain. So long philosophical rooting there. To tie it all back to Bitcoin, again, the question, what is money, right? Money, as the Austrians would define it, is a universal medium of exchange. I would make this even more simple by saying it is the most tradable asset in any economy, or the most liquid asset in any economy. It is the asset used to facilitate indirect exchange, and by virtue of it being the most tradable asset, it becomes sought by all economic actors, no matter what value aim they are pursuing, because they know that money can be exchanged for anything else in the economy. So no matter which way the course of their goal-directed action is taking them, money is an accelerant to getting there, because money can be traded for anything else, right? Instead of trying to trade this thing for that thing and the next thing, and then backing down the rank order, you can just go from money to the next object, right? You're selling telescopes for money, you trade money for globes, versus trying to trade the telescope for the wagon for the hot tub for the, so it's an accelerant to free trade and value realization, frankly. Money, historically, has had to exhibit 5 critical properties to be relevant, to be selected as money. And this is why gold was chosen as money. A lot of history here. I'll try to just compress it and we can unpack where you see fit. But money needs to be divisible, durable, recognizable, portable, scarce. Historically, the free market selected the monetary metals as the best tool for fulfilling those 5 properties. So metals were exhibited the greatest divisibility, durability, recognizability, portability. Of the monetary metals, gold was the most scarce. Now, scarcity here being defined as the most inflation resistant, or the highest stock to flow ratio monetary metal.
Sorry, let me jump in there, Robert, because as I recall the way Aristotle defined it, I don't remember recognizability being there. Durability, divisibility, maybe recognizability is what he called consistency. And then there was right, and then there was value in and of itself, which I know goes back to the beginning of our conversation. But as Aristotle framed it, the 5 properties included that the thing itself had some sort of intrinsic value, which of course is relevant to the Bitcoin question.
I would argue there is no such thing as intrinsic value whatsoever. And I would also argue Aristotle, what he was actually referring to is the Mises regression theorem. So the thing in and of itself needed some industrial or utility value prior to its monetary use. And actually, when we look at the whole spectrum of assets, money isn't just black or white. It's not like money, not money. There is money, which is the most tradable thing, but then things below that that are also still very tradable exhibit moneyness, if you will. So there will be a demand, for instance, for actually jewels are a great example. Diamonds, right? Diamonds aren't money per se, but they have this industrial use value that accounts for part of their demand in the marketplace, and they have this store of value use value that accounts for part of their demand. So they exhibit some of these other properties we've laid out, like divisibility, durability, recognizability, et cetera. So that the point is, money exists on a gradient. There is money, which is the most tradable thing, but then other assets exhibit greater or lesser degrees of moneyness, if you will. And Mises regression theorem basically says if you trace that all the way back, that at some point, what is now money originally had some pure industrial use case. Someone was trading it, just the demand configuration for that asset was purely the services it rendered in an industrial or utilitarian use case. But eventually, it develops a secondary configuration of demand that accounts for its exchangeability across time. That I have demand for this asset because I expect others to have demand for this asset in the future. That's what makes money money, right? And then we look at something like gold, 12 trillion market cap. Maybe 1 trillion of that is its industrial value, perhaps, right? For electronics and
right, but
dental
it's the root of it. So let's go there. That's directly. What's the use case then for Bitcoin other than its use as a currency? Because everything else has always been tied
right.
to what you're calling the industrial use case. And it seems like Bitcoin's use case kind of diminishes almost by its own success, right? As we get closer to the 21 million, it becomes harder to produce new ones. They're not really used for anything else other than this medium. It seems disconnected from the use case that you have just described as being, part of how money has evolved and what it means.
Yeah, this has been a hotly debated topic in both Bitcoin and Austrian economic circles. Does Bitcoin fit the Mises regression theorem? As in, if you back Bitcoin up all the way to the beginning, what was its utilitarian or industrial use prior to having a market monetary exchange value? There's one great piece I would recommend to read on this. Actually, it's titled "Why Does Bitcoin Have Value?" by John Pfeiffer, I want to say is the author's name. He makes a certain argument that I'll let the audience go and dig into. I'll make my own argument. I think his argument's very compelling, actually. He actually argues that it does fit Mises regression theorem because the network itself, before Bitcoin ever had an exchange value in the marketplace, had a utility value for being a global system of accounting, like a triple book entry system of accounting, if you will. And then it actually did, the network existed for 18 months before Bitcoin ever had an exchange value. So there was this bootstrapping period. I would take it a step deeper. And the way I think about it is Bitcoin is the internet. I know a lot of people say Bitcoin is the internet of value or whatever, but okay. So the question is then, what is the internet? The internet is a set of open source protocols constructed in layers atop one another for permissionlessly moving information across time and space. So I can go and create a website today without asking IBM's permission, right? You can do these things. Now there are permission layers like the application layer, which would be Mr. Trump getting kicked off Twitter, right? He lost the permissions to be on the application layer, but that doesn't stop Mr. Trump from going to set up an alternative to Twitter or whatever. So this is called the Internet Protocol Suite. So there's the application layer, the link layer, there's one other one, and then the application layer. Bitcoin, in that lens, can be considered the latest layer in the Internet Protocol Suite. It is just an open source protocol for moving monetary value or exchange value, or these perfectly scarce tokens across time and space without permission. So I would trace actually Mises regression theorem back to that. would say that Bitcoin emerged as money by bootstrapping itself to the original utility value of the internet. Now that's a whole nother rabbit hole. So then you say, well, where's the original utility value of the internet? I haven't unraveled that one yet, but I think it's pretty clear that there's a tremendous amount of utility to the internet, as we're proving right now by
Yeah, no,
recording this
let's
show.
stipulate that the internet has some value. All right.
Yeah.
But there's so many ways we can go, and we only have so much time. So, is there an argument or a case that you could make from the sort of philosophical approach to value? And by the way, I get the Misesian subjectivity of value and intersubjectivity of value case. I get that. I don't know if I have Mises behind me here, but he's around here somewhere. But how do we connect this, or how do you connect this to price? And maybe the answer is you don't. Like if you're thinking that fiat currencies are all going to collapse and we're going to need the best medium of exchange afterwards and it'll be Bitcoin based, then maybe you don't care what the price is. You just want to have Bitcoin for that future world. But well, certainly if I'm a speculator who wants to buy Bitcoin because I think the price will go up that I could then cash out on, that's not the answer I'm looking for. But besides the speculator, even just as a potential Bitcoin owner, I think a lot of people out there would find it very distressing if they put US dollars into it and suddenly it became, for a protracted period, traded for a lot fewer US dollars. So how do you connect your theoretical value case to the price situation in the world today?
So to round out the value discussion, this is another piece of homework for the audience. Go out and read Modeling Bitcoin's Value Through Scarcity, I think is the title of the blog post. It's become a wildly popular piece, written by Plan B, who's an anonymous Twitter. He's actually a commodities trader, but he's pseudonymous. He's on Twitter, but no one knows who he is. He has charted Bitcoin's historic log price over its issuance schedule, which is, again, that stock to flow ratio, right? So every 4 years, the new supply of Bitcoin cuts in half, which means its inflation rate is cut in half, which stock to flow is the inverse of the inflation rate. So 1 divided by the inflation rate means its stock to flow ratio doubles every 4 years. He's plotted gold and silver, and I think platinum as well, over that same curve. So you can actually plot the monetary market value of gold, silver, platinum, not just monetary market value, market cap of those commodities over their stock to flow curve, and you get a pretty high correlation. And the same correlation holds for Bitcoin. Now, I'm not arguing for the veracity of this model. I mean, I can tell you today, historically, it has like a 97% correlation. I don't say that this model is going to hold forever. I don't know if it breaks the upside or the downside. Who knows? But it is incredibly interesting in that it's one of the first, if not the first, only model we've ever had of a supply curve, a known supply curve for a commodity influencing its market value directly. So typically we think, again, demand is subjective, but here we have this objectively determinable supply influencing, or supply relationship, let's say, influencing market cap, which is interesting enough. Now with Bitcoin, the stock to flow ratio of Bitcoin is known perfectly from now until 2140. So every 4 years, Bitcoin's new supply is cut in half. Stock to flow ratio doubles every 4 years. It's equal to gold today. Gold is around 55. Its supply inflates about 1.8% a year. So its stock to flow ratio is about 55. Bitcoin's last halving was in May 2020. Its stock to flow ratio is roughly equal to gold's today. In May 2024, it will double again and become 110. That will be the first time in history we've had an asset with twice the stock to flow ratio of gold. We're in totally uncharted territory at that point. And Bitcoin's price action has mapped directly onto those halvings. So halving occurs, 12 to 18 months later, we have a new Bitcoin all-time high price. The theory is that by constricting new miner because miners are securing the network, being rewarded in Bitcoin. They're then selling that Bitcoin $4 to pay their bills, largely their electricity bills. When that selling pressure is cut in half overnight, the theory is that just slashing sell pressure 50%, holding demand neutral, puts a lot of upward pressure on Bitcoin price, which we're seeing play out now. All that aside, take that whole model, super interesting. It's adhered and been highly correlated for 12 years. We would expect it to maintain, or at least in the short run, it is maintaining itself, but don't know what it would do long term. If it does, but here's the one last thing I'll say about this. The longer it adheres, the price adheres to that supply curve, right, or to the stock to flow ratio curve, the more the incentives to front run it become just enormous, frankly, because the stock to flow ratio, as it approaches infinity, that's when Bitcoin becomes infinity. That's when it becomes the money that eats all others. That model has Bitcoin at a $10 million US dollar exchange price by the year 2030. So my only point is that Satoshi long ago predicted that this thing could become a bit of a self-fulfilling prophecy, and that if it does catch on and it does, its market cap tends to move in correlation with its supply curve, that people, the incentives to buy it in anticipation of future appreciation would become enormous, such that it becomes a self-fulfilling prophecy. So all that said, model's interesting, check it out, form your own conclusion. Here's what we do know that will not be changed so far as we can tell throughout all of history. Money is demanded based on the credibility of its 5 properties. So how divisible is the thing? How durable is the thing? How recognizable? How portable? And how scarce? That's what made gold money. And if we look at Bitcoin through the same lens, we can say that it's virtually perfected the properties of money. Each Bitcoin is divisible to 100 million units. If that is insufficient, a fork can actually increase the divisibility further. We could go to 1 billion or 100 billion subunits. Bitcoin, because it's excuse me, distributed information, the entire Bitcoin history is stored on every node and in every miner, right? So Bitcoin has this sort of fractal pattern that the network is everywhere and nowhere. Information stored in a distributed fashion like this is incredibly durable. The example I like to give is the Bible. So the Bible is just distributed information. It's everywhere and nowhere. You could try to go and alter it. You can grab a Bible and alter it and say, hey, read my Bible, but you're going to get evicted from the network that is the Bible, because people will clearly see that you've made changes that don't reconcile with the Bible that the network understands. And for that reason, the Bible has outlasted empires. So information stored in the distributed fashion is very durable. Recognizability refers to your point earlier, the fungibility, the auditability, the resistance to counterfeiting. If you run a Bitcoin node, Bitcoin is perfect in all respects. You can audit the entire supply. You can know the Bitcoin you received is real Bitcoin. And Bitcoin, actually, it does lack a little bit of fungibility at the base layer, because you can trace Bitcoin transactions as far as like where they've been. So if they've ever been in the hands of someone that a state actor would consider a bad actor, you could have tainted coin, for instance. But there's privacy tech being built up around this that I think improves Bitcoin's fungibility over time. In terms of portability, Bitcoin is pure digital information, so it can be beamed at the speed of light. Can't get much faster than that or more portable than that, so it's perfected portability. And then finally, in terms of scarcity, we just covered Bitcoin stock to flow ratio. That is the quantifiable measurement of scarcity. It approaches infinity, and actually goes to infinity when the last Bitcoin is mined. It is impossible for us to have a guaranteed fixed supply of anything physical in the world. If we all went out right now and started mining more gold, everyone in the world, we could radically decrease its stock to flow ratio and get a lot more gold above ground much more quickly. In Bitcoin, if we allocated every computing resource on the planet to go mine Bitcoin right now, the algorithm would adapt via the difficulty adjustment, and it would become harder to mine Bitcoin. such that it would continue to adhere to that perfectly fixed and diminishing supply curve that approaches zero in 2140. So as I've argued in much of my writing, all we've had today in money is relative scarcity. That's what made gold, that's what gave gold its monetary premium relative to all of the monetary metals and all of their assets. In Bitcoin, we have achieved the discovery of absolute scarcity, meaning a perfectly fixed supply that no one can alter or change. So the punchline to that is, we've always said there's two certainties in life, death and taxes. Satoshi Nakamoto introduced the third certainty, and that is 21 million Bitcoin.
All right, let me connect this to, you phrased this right. I understand what you said. By the way, you didn't really answer the question, if you don't mind me asking.
Sure.
I'm guessing you don't own Bitcoin as a speculation. You are of the camp that you want to have Bitcoin because of your future expectations for its use to you.
Please define speculation, because as Mises would say, all human action is speculative.
I mean, so financial speculation. I mean, putting dollars into Bitcoin now with the expectation of getting more dollars out in the future.
My strategy is to accumulate and never sell.
Okay, so that answers my question. What I want to do is I want to tie this into the question of physical existence, and it segues from your explanation of perfect scarcity. This is possible because Bitcoin is a ledger entry. It's fundamentally, it's a concept, it's an idea. It has no physical existence. It has physical embodiment, or it has this physicality to contain it, as it will, and exchange it. But the thing itself is conceptual. And I can see where that makes it perfectible for certain things. But it also strikes me as being a weakness. I mean, at the end of the day, if Bitcoin itself or any crypto is perfect and the system is distributed and you can't stop it without destroying the entire internet, it's possible governments could try to destroy the whole internet. If they're faced with self-extinction and attacking their control of the money supply, which is absolutely vital to their survival. You're part of or the system can be perceived as an existential threat to the state as we know it. And there's a lot of different aspects of this. And one is, it concerns me as a potential Bitcoin holder or any crypto holder or user that if the state decides to criminalize it, that this has big consequences. The other thing is, if the computers go down, or there's an EMP, or who knows, right? The whole thing becomes questionable whether this perfect store of value is of any use to me. And the kind of chaotic world in which governments lose control of money is a crazy world. And in a crazy world like that, I kind of like the idea of having something physical I can hold in my hand that's pretty universally accepted around the world as being a store of value and a means of exchange. So help me with this. Help me understand, or help me get comfortable with the non-physicality of Bitcoin in a dangerous world.
Sure. I'd say first of all that I agree with you about gold. Don't let me, again, this is not binary for me. I'm not like, I do think long term Bitcoin consumes all monetary value, including that of gold, but that's my long run perspective. The medium term transition here, high degree of uncertainty. Who knows what's going to happen? We've never seen anything like this. Here's what we're looking at, by the way, is, to frame it up a little bit, digital technologies. I mean, I think if you don't agree that we're in some sort of new technological paradigm at the least, possibly a renaissance in human organization at most, then I think you're living under a rock. I mean, digital technology changes everything, right? Everything. It's changing us too. Like, could you imagine, we all take Uber or Lyft or whatever rideshare service today. Could you imagine going back in time 30 years ago and say, hey, there's going to be a supercomputer in your hand that you order a stranger to come pick you up in a car, and you jump in the car with a stranger. Like, it changes the nature of trust even, right? So my thesis, at least, is that we are living through a digital renaissance. Like this, the Andreessen Horowitz quote that software is eating the world. The world includes government as well. And I think this Bitcoin, what's so exciting about it is that it is the latest and greatest testament of the triumphant power of digital tools over analog tools. But it's the ultimate face-off as well, because we have gold, which is a 5,000-year-old at least tool that is at the center of governance of all human behavior, right? The dominant institution in the world holds gold. They use the sovereignty that they derive from those gold holdings to control populations, largely tax, inflation, laws, borders, military. All of this comes from their gold holdings. Whoever holds the gold rules the world. Facing a competitive threat and even an existential threat from a 12-year-old digital upstart we call Bitcoin. So we see a digital technology potentially disrupting a 5,000-year-old tool that makes the world go round. So radically exciting to just intellectually what could happen here, but totally unknown. There's no comparison, no example. Nothing like this has ever happened to this degree. I do point people on this topic to the book, The Sovereign Individual, which I think has been done the best job of explaining the type of transition we're going through. And it's made a number of predictions, a number of which have come true, a number of which we've yet to see. So I think that's a really interesting book. But in terms of...
Sorry, I was also thinking, what you've just been saying also makes me think of Snow Crash and the files system that Neil Stephenson outlined. Just to throw that in.
I haven't read Snow Crash yet, so I can't speak to that one. In terms of state response, like, would they destroy the entire internet in an attempt to maintain control? It's a possibility.
Well, but less extreme than that. You can't crack the Bitcoin system, but if you can detect Bitcoin transactions, and even if you couldn't,
can't do that.
You can.
You cannot on things like using basically. Here's one thing that's happening right now in Bitcoin, and this is just to name one of countless projects that's taking place. This is called Taproot, and this is I believe this Taproot. This is an upgrade to the Bitcoin core protocol. I'm not the most technical guy, but I believe it's a core protocol upgrade. And the high level of it is that it actually makes coin join transactions cheaper than standard transactions. A coin join transaction is when inputs and outputs get completely blended together. So it makes inputs and outputs in a block totally anonymized. So this is just one thing. There's thousands of projects like this being geared towards increasing Bitcoin fungibility, anonymity, privacy. I'm just naming one here. That makes the transaction cost cheaper to do it in an anonymous fashion than in a non-anonymous fashion, such that it pushes everyone in the world to start engaging in anonymous transactions. When that happens, what governments use today to track Bitcoin movements is called chainalysis. It's broken. It can't do anything. It cannot see a depth of transaction or trace them at all. Point is I bring that up just to highlight that encryption technology is such a game changer. Like, we've invented the printing press, basically. The same way the printing press disrupted the church's monopoly on knowledge,
Understood.
Encryption technology disrupts the state's monopoly on commerce. And it's irreversible, it's unbreakable. You can't squash it, because to your point, it's an idea, right? Bitcoin's an idea, encryption tech's an idea, open source technology is an idea. Good luck suppressing data in the 21st century. Good luck stopping the flow of data, right? Because all you need is one instance of that idea to survive anywhere, in anyone's head, anyone's computer, anyone's sheet of paper. You can print it out, anyone's cold storage. All you need is one to survive, and the whole network survives. So it is extraordinarily anti-fragile. In terms of government state response, could they crack down on the internet? I think they absolutely could. But the way that I see this, there is clearly a doom and gloom scenario where the state wages all-out war against Bitcoin, destroys the internet, disparages Bitcoiners. It's drug money.
Arrest people. I mean, if the system is
Arrest
hardened,
people,
the people have to be the soft link.
Yes, there is a doomsday scenario where all that plays out. I tend to think the truth falls in between the extremes typically, right? There's also a utopian scenario where Bitcoin just eats the world and everyone's happy and governments fall and we're singing Kumbaya. I think the truth falls somewhere in the gray area in between. And the way I see this is looking into the future is very dangerous business. You're pretty much always wrong. So forgive me on that. But I tend to look at it as people adopting the most energy efficient strategy over time. And when I see a state that is looking at Bitcoin, it's an existential threat. They would love to shut it down. Like if Bitcoin were a company, right? If Bitcoin were PayPal or eGold in the 90s, right? They shut it down. That's what they do. They're really good at chopping the head off a centralized snake. Really bad at dealing with a decentralized swarm organism, right? That's what BitTorrent was in the 90s. They couldn't stop it. I think given how much energy would be necessary to clamp down on Bitcoin to wage this total war doomsday scenario and the cost associated with it, because this wouldn't just be damaging to Bitcoiners, right? This would be damaging to the world. This would decimate economic output.
Well, e-commerce itself would. I mean, it's hard to see how you stop Bitcoin without stopping e-commerce, which is not a small part of the overall economy right now.
The whole internet. If you don't really stop the whole internet permanently, then you're not going to stop Bitcoin's value proposition. Which, by the way, it doesn't eliminate Bitcoin. It's not like you turn off the internet and Bitcoin goes away and we lost all the transactions, because it's always backed up into other places and cold storage. And as long as one instance survives, the whole thing survives. Again, but what you can do by turning off the internet is disrupt its value proposition to a great degree. Like the fact that we can transmit this thing globally is a huge, again, back to its monetary properties. Therein lies its portability. We can blast Bitcoin all over the world at the speed of light. That's a huge aspect of demand for it as money. But I tend to think governments would pursue a more energy efficient strategy, which I think you're seeing happen in the world today, is Bitcoin is becoming embedded into the legacy financial system, right? We've got large corporate treasuries adding it to their balance sheet. We have a senator in Wyoming that's a Bitcoin advocate. Every one of these new stakeholders that becomes aligned with Bitcoin brings with them their army of lobbyists and influence and whatnot. And if you've interacted with Bitcoin for a little bit of time, it's very interesting that you may not be a Bitcoin believer, but then once you start interacting with it and seeing the potential of it as money, and you start accumulating a little bit, it's amazing how quickly your perspectives can change as a result of your incentives, right? Back to the table. The table's an accessory to me now, but if someone incentivizes me to jump over it, it becomes an obstacle. So I think Bitcoin, the perception of Bitcoin can shift very quickly in the minds of regulators, in that they want to stomp this thing out. Not easy to stomp out, or maybe impossible. So what do they do instead? They acquire a little bit as an insurance policy against its success. Like, hey, this thing really is outcompeting whatever. The mayor of Miami today spending 1% of their treasury into Bitcoin. I think you'll see similar dynamics play out between other legislators and regulators, and that they'll start to compete for citizens, right? They want to be on the cutting edge of this wave of innovation. So they'll be like, hey, we'll add some Bitcoin to our balance sheet. We'll relax the crypto laws. And Bitcoin just becomes more enmeshed and more entrenched into the socio-political sphere until the point that it's impossible to remove. And in doing so, every incremental unit of demand, or let's say, every time you're buying Bitcoin, you're selling fiat. So it's energy shifting from the fiat legacy network into the Bitcoin network. And this has the effect of, in my opinion, dissolving the power structures from the inside out. because we tend to think in economic aggregates, like what is the United States going to do? But we forget that the United States is a patchwork of distributed agendas and parties and spheres of power, right? So as these groups get exposure to Bitcoin, they lose their sort of centrally cohesive tendencies and become more decentralized over time. I hope that makes sense. But the point I'm trying to get at is energy efficient strategies are most often pursued by organisms and organizations. And the most efficient strategy in the face of Bitcoin as an existential threat for the state is to acquire a little bit as an insurance policy against its success. By acquiring it, your incentives are changed, your perception of the world is changed. And I think it just incrementally over time breaks down centralized power structures and moves us into a world where governments are forced to compete for the loyalty of their citizens.
I would. This is why I'm having this conversation. I would love that to be right. As a hardcore freedom advocate, I'm an anarcho-capitalist. I would love to see the market solve the problem of coercive states, and this could be a tool in it. But that very thing makes me cautious. When somebody tells me something I want to believe, I need to make sure that the logic is sound much more than if they're telling me something I don't want to believe. Then it's easy to be skeptical. It's easy to put something through the trial and give it the acid test. But when somebody tells me, oh, this is going to reduce the power of the state, well, woohoo, that's what I want to happen, right? So I need to be careful.
Well,
Let's
agreed a lot. Like again, it's all thought experiment. We don't have any historical comparison, really, other than the book that I recommended, The Sovereign Individual. If you're an anarcho-capitalist, I highly suggest you read that.
I have,
really
but it's fine for the audience to recommend it.
Yeah, I would say that draw your own conclusions. But Bitcoin, the one thing for me is Bitcoin is a vote for that future. If you're holding your savings in Bitcoin, you're voting with your monetary energy for that future. I don't think that's arguable, right? You've taken energy out, you've removed demand from the legacy fiat system that finances all of these things anarcho-capitalists don't like, and you've moved that energy and that demand configuration that you create into an alternative system that cannot be controlled. So I like to think about it as that, as we're voting with our money. And so
like
where do you want to store?
Okay, I could actually I could stipulate that as an ideological issue. I think I can't think of an argument why you would not support cryptos in general as an ideological issue. We've been talking for a while, and I know that you only set aside an hour for this. Sorry, go ahead.
Last thing, Bitcoin, not crypto.
Okay, well, I have a couple other questions, but
okay.
Why Bitcoin, not crypto? I mean, yeah, I understand that there is a unique case for Bitcoin, but should not the market decide what's the best, and let's see what happens?
Absolutely. I am by all means an advocate of free market experimentation and competition. Make as many coins as you want. I would just say that from my view, studying monetary history, in a nutshell, the same reason we have one analog gold, for the same quantifiable reasons that we've touched on today, the stock to flow ratio, monetary properties, etc., are the same reasons we're only going to have one digital gold. And that is a race that has been
sorry, Robert, that's not true. I mean, gold and silver circulated together, and even copper.
Well, here's why. Gold lacked portability, right? Very heavy, very expensive to secure, expensive to transact. That's actually why we abstracted gold into paper currencies. That's why we had these warehousing functions that would centrally hold gold. They would issue warehouse receipts, which later became banknotes, which later became Federal Reserve notes, that allowed us to increase the portability of gold while maintaining its other monetary properties, right? When we were using physical gold, before we were using paper currencies, silver acted as the medium of exchange money because it had greater portability than gold. We could use it more easily for day-to-day transactions. So they had a complementary feature set when they were used as physical metals. But if you look at the history, once we moved to a global gold standard that was facilitated by banknotes and telecommunication networks, silver is largely demonetized because all of that portability function that silver used to provide was now absorbed by gold, by the gold standard, effectively.
Right, but
And
I'm
again,
just saying
Bitcoin,
for hundreds or thousands of years there was a multi-commodity money system. It wasn't just gold, and there are certainly different use cases for different cryptos. I would see a place, and you yourself, there's degrees of moneyness.
yes,
So won't
I
some of these
agree.
other cryptos have degrees of moneyness on up to Bitcoin?
I agree, but the thing that's slightly different about digital space is that we see this with things like Amazon, Netflix, Facebook. The winner take all effects and the network effects are much stronger in the digital domain, and the ability to copy features, right, is much lower cost. So the point is that a lot of these alternative crypto assets tend to be, as I view them, as test net for Bitcoin. If they go into the marketplace and they establish some market proven feature that people really like and they really want, so long as Bitcoin can absorb that at the base layer protocol without compromising 21 million, then it will do so, right? It has this ability, and in the biological domain, we'd call this horizontal gene transfer, where like a mycelium network, when it's competing in the biological space, if it encounters a threat that it neutralizes, it actually eats the threat, learns from it, and spreads that information to the entire mycelial mat. So in digital space, we have a similar competitive dynamic playing out. I don't disagree, though, that there could be alternative use cases for these crypto assets, as in markets orthogonal to money. But I think for money specifically, like for global digital non-state based money, that is Bitcoin. And that is the biggest game, by the way. That is by far the biggest game. Money in the world today, roughly $100 trillion market. You could argue as high as 250 trillion if you lump in some of these other store value assets that have absorbed monetary energy as a result of fiat currency store value being compromised. That's the biggest game to me. So all of the other, you say Bitcoin is in that domain, run and won. All of the alternative crypto assets would be competing for something maybe 1/5 the size of that. So maybe all the other crypto assets are competing for a total addressable market of say 20 trillion. Possible, but it's all liquid venture capital at this point. It's all theoretical. There's a lot of unsolved computer science problems, et cetera, et cetera. Bitcoin just needs to keep doing what it has been doing flawlessly for 12 years to continue out competing as money. That's why I distinguish between the two. I'd say Bitcoin is the internet. Alternative crypto assets are liquid venture capital.
All right. Before we move on from the state, let's say Bitcoin survives anything the state can throw at it, because it needs to kill itself in order to kill Bitcoin, is basically what it amounts to economically. But again, the people are the soft link here. I'm reminded of the example of Al Capone. As I recall reading my history, they never caught him in any of his actual crimes, but they did a lifestyle audit on him, and they caught him on tax evasion, and he ended up in jail just as well. So, if the answer for Bitcoin is that it's so durable that it survives the implosion of the nation state as we know it, and at some future point it becomes all the money of the world, that doesn't help the Bitcoin person now who actually might be interested in using it if the state really starts clamping down on the people. And we have Lagarde saying it's only criminals that use Bitcoin, and Yellen just echoed it. Oh, it's largely used by criminals, right? This is their favorite trick. Anything they don't like, only criminals are interested in that. So, how do you reassure a person, who doesn't want to have to confront the state if, being unhappy with their hodling?
I would suggest that they acquire their Bitcoin anonymously. There are ways to do this with peer-to-peer exchanges, Bitcoin ATMs. You could acquire directly from Bitcoin miners if you're looking to acquire a large amount.
And sorry, you would trust that Robert, if you walked up and saw a Bitcoin ATM in a supermarket or an airport somewhere, you'd put money in it and feel confident that the little thing it gave you. I mean, if you're not a computer scientist, how do you know that thing's real?
Well, I'm not arguing that there's not a learning curve here. You need to know, you have to do some homework on the company itself. There's a lot of reputable Bitcoin ATMs worldwide. You'd have to do the homework to figure out which ones to do. It's not like and you can also test it. You can go put $5 in the thing and see if your Bitcoin gets delivered or not before you put in 500 or 5,000. And there is a learning curve on the back end that you need to be running a node. You don't have to be, but you should be running a node to verify that Bitcoin that you received is Bitcoin and it's settled to the main chain and you have final settlement of your Bitcoin. Then you need to take on all the responsibility of custodying it properly. Now, there are service providers for all of these things every step of the way, but it is very much the wild, wild west. I'm not going to lie to you. It's
that's a really interesting and key point. I think that's worth stressing. You're talking about self-education. If you're going to be in this, you should be serious about it. If you're just going to let, trust Coinbase or somebody else to do it for you, then you're vulnerable to anything that they might be hacked or what might happen to them.
100%. To leave your Bitcoin on Coinbase is an abysmal strategy. I would say just don't even get into Bitcoin if you're not going to take it off the exchange, because everything we're talking about today, Coinbase is a centralized institution very close to the power center of the United States. If things ever get dicey, it will be the first thing they take down or nationalize or confiscate. So if you've got Bitcoin, and this goes for any exchange, I'm not singling out Coinbase, but they are one that's close to the power center in the US. Any Bitcoin left on any exchange is not your Bitcoin. It is a Bitcoin IOU, right? Just the same with gold. If you have a gold certificate from custodian ABC, if they haven't fulfilled that gold and you physically have it in your hand, you don't have gold. You have an IOU to gold. You have a promise to gold.
Understood. If there's counterparty risk, you've changed the entire nature of the thing. So I get that. Okay. All right. Another thing that comes up that I've heard is, and I don't know this for myself, and I'm reading and I'm trying to educate myself before this, but one of the things that came up is the question of the Bitcoin whales. That apparently there's a very small number of people who got in early and who own an enormous amount of the theoretical, or we assume the Bitcoin out there. It's something like less than 1% owns 80% of all Bitcoin or something like that. I mean, those numbers sound really alarming, and whatever their actual number is, it strikes me as being, in the case of a pretty small market, I mean, the virtue of it is that it's small, but that also makes it more easily manipulable by large players. What would you say to people who are concerned about that?
I don't know the actual, here's the other thing, that you can't trust any of these numbers that say 100 people own 80% of the supply, because all you can see are the addresses that own the Bitcoin. You can't know, like, for instance, Coinbase may have an address. Coinbase. That address may be related to 800 of their customers, right? Well, you can't know that. So to say one-to-one address to person is a fallacy, first of all. Second of all, it is concentrated. There's no question that it's concentrated, because there were early adopters that accumulated a shitload of Bitcoin before it became more popular. But the tendency of Bitcoin over time, and you can also do this analysis, is that it becomes more widely dispersed across more wallets over time. So every time it does one of these price booms, you're creating massive incentives for early adopters to sell, some into cash, buy houses, whatever they want to do with it. And this is moving into other hands. Whereas, so it has this tendency to, the money supply has a tendency to become more widely held over time, as a result of Bitcoin's contracting stock to flow ratio and the number go up technology, as people refer to it. Fiat currency is the opposite. Fiat currency is a system where the early adopters, quote unquote, are those with political or physical, even proximity to the printing press, so that they continually get to siphon wealth off of the middle and accumulate it at the top. So Bitcoin is a proof of work network, which we didn't talk about exactly, but let's just say that the value of Bitcoin is rooted in work. The value of fiat currency is rooted in theft. So it's not only are we using inflation to finance the value of the fiat currency complex, inflation and taxation, non-consensual taxation, both of which are theft, but it's being siphoned to a few at the top at the expense of everyone else. So all the cost of that money production are being externalized on everyone else by inflation. And this causes the opposite tendency of Bitcoin. Whereas Bitcoin tends to be more widely held over time, assets and money in a fiat currency complex, as we see very clearly since going off the gold standard in 1971, tend to be concentrated into fewer and fewer hands over time. And this is why fiat currency collapses, right? It's a weapon of time theft, where those that wield the political power to print money can steal time and energy from everyone else that's forced to use it. So I can't say specifically that Bitcoin is too concentrated or not too concentrated, but the tendency over time is to be less concentrated, whereas the opposite tendency prevails in a fiat currency system.
All right, and one more thing that came up is, I guess we probably addressed it already. You talked about intermediaries, and I can guess what your sort of approach categorically would be, but there's this problem with Tether and other intermediaries who may or may not be bad actors. And I suppose the answer is worst case scenario, they do some harm, but it's short term and Bitcoin survives it. Is there more to that?
Yeah, Tether is a very popular piece of misinformation that gets spread around in every bull market. There was recently an article that was, I think, 30 people maybe sent it to me. They were like, "Oh, are you concerned? Are you scared about this?" And I go and I read the article, and it bears a striking resemblance to an identical article I was sent in 2017, but it's representing itself as some new information. Like, "Oh, I recently discovered that." And so I don't know. That to me is so fascinating, that who's doing this? Who has the incentive to reproduce almost an identical article to 2017 and 2021, but then claim it's new information? So it feels very artificial to me. But the long and short with Tether, there have been 3 academic studies done on it. One said that they were mapping the movements of Bitcoin price action to Tether issuance. So they thought that Tether is running a fractional reserve, using it to pump Bitcoin price. The other 2 found no statistical relationship at all. All of these Tether FUD pieces are based on that first article. And if you just look, and you can do a real cursory look at Bitcoin's price action from, I think, 2018 and 2019, the treasury of Tether exploded over time, but Bitcoin price was sideways. So there's no relationship there, just for real quick glance. And I would say, even if you just run you give into all the assumptions, like, okay, Tether is a zero reserve, complete fiat digital stable coin out here running a total scam. What happens if it collapses? Well, let's play it out. So it's a $22 billion stable coin. As soon as people decide that, hey, Tether's a scam, it's not going to be pegged to the dollar 1-to-1, it's going to go to zero, they start to do what? Sell Tether, right? What do they sell Tether for across all these exchanges? They sell it for the largest pairing, deepest liquid asset, which is Bitcoin. So you would have a flight to safety into Bitcoin, or if you could get Tether for dollars, which is there's much fewer pairings for that, you would have a movement into dollars. So what would this do to Bitcoin in the short run? It's like it would drive Bitcoin price possibly in the actual flight to safety, and then Tether would go away, and then there's a dozen other stable coins out there that people would use for stable liquidity pools. So the whole thing is immaterial to Bitcoin in the long run. But it's just remarkable. I think back to your earlier point where you said, when someone tells you, because Bitcoin does sound too good to be true in a lot of ways, and it triggers those skeptical, like, I don't, like, where is it? It's got to be wrong. Where am I blind? What's wrong here? People just grab on to anything they can, especially if the article is well written. They put a lot of mathematical charts in there. They cite statistics. It seems very sound and robust, and you're like, wow, this must be the thing. And in 2017, I was scared when I read that. I was like, holy shit, what is this? But having been through all of these cycles and now seeing how this game actually works, and seeing that there's no causal relationship between the two, you become very hardened against this FUD or misinformation that you see creep up during bull markets. So that's my general stance on Tether.
All right. Well, just one last question then, and I may guess the answer, but I understand the theoretical case you're outlining. I understand the long-term vision that you have here. But in the near term, do you, no, you already said you never sell any Bitcoin. So do you have any words of wisdom at all for people who want to buy or are thinking about buying Bitcoin for price appreciation in the near to midterm? For dollar price appreciation?
Um, I mean, the first step to any of this is to always arm yourself with knowledge, invest in studying this. It's infinitely deep and interesting, by the way, this rabbit hole that people call it, by asking these fundamental questions. What is money? What is government? What is the firm? Why are all of these socioeconomic systems in the world structured the way they are? I find it to be just, it is so enriching to my experience in life to be able to see the world through these new lenses, and you just gain a more holistic perspective on things. So that to me is the most invigorating aspect of Bitcoin. And those that are pursuing it for short-term price gains, I would say just, buy a little. Where your money goes, your mind tends to follow, right? Once you've got some skin in the game, you're going to pay a lot more attention. You're going to feel much more motivated to ask these deeper questions. And I think you'll experience this very interesting aspect of Bitcoin, is that it actually changes people over time. People report, and it's a different flavor for everyone, but the general theme is people tend to become lower time preference, which is to say they think more long term, more focused on family, more focused on community, health, savings, right? Because Bitcoin, it's a very strong savings incentive. If you're holding an asset that appreciates an average of 100% year over year, why are you buying the big screen TV? Why are you buying the new car? Why don't you just hold out for another year or two and get the thing at half price, So back to incentives shaping outcomes or shaping human behavior. It really flips the incentive structure on its head when you move out of the fiat system into the Bitcoin system. And it's a great experience, I think. And I think, to me, points toward Bitcoin being a hope for this new world, that we can get out of these flawed fiat incentives we've been living under for 50 years strongly, but 100 years more generally, and back into a sound monetary system that induces good behavior. And the last thing I would say is just that I know you said theoretical. There's a lot of theory here looking forward, but if you look back 12 years, and if you're humble and you're a student of the market, just ask yourself, why is Bitcoin the best performing asset in human history? Why is it exploding at a time when central banking is crumbling? There is a lot of practicality here as well. It's not just theoretical, right? Bitcoin's moved over $2 trillion of transactions in 12 years. It's not a toy anymore. It's really maturing. And yeah, it's a really, really exciting time to be at the cutting edge of this digital renaissance.
Okay, well, I'll let you have the last word on that. I appreciate your time, Robert. I hope you're right. I literally and sincerely, absolutely hope you're right. I would like to see your vision of the future deliver in spades. So I look forward to seeing what happens.
Thank you, Lobo. I hope I'm right too.
All righty. Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.